You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
Happy birthday, Brandon. It's the big 25.
Thank you. We're back. We're back for 2020. Back. I'm 25 years old.
What a start to the year.
Jeez.
It's amazing. We took a little while to get going with this podcast this year.
Yeah.
I apologize. We're a couple of weeks delayed. We've been so busy.
We have been. Yeah, it's been a very, very busy time. It's just hard, you know, especially because we know that we want to do the podcast, right? And it just takes so long to properly prepare the podcast and all that sort of stuff. But yeah, we're back now. So happy New Year, everyone. Happy New Year, Hamish. What you been up to in the last couple of weeks?
Just working, you know, always the start of the year. It's kind of like a motivator to just do a whole lot of work and just sort of cram out stuff. I mean, we had the re-enrollment open for Learn by Example, which is sort of the platform that I'm running.
Yep.
So that was the first 2 weeks of January. That went really smoothly. I was really happy with that. Been cramming out a ton of YouTube videos.
Yeah. Yeah, how are you going with your YouTube stuff? Because I did notice that you kind of weren't uploading as much. Are you getting back into it now, or?
Yeah, so I mean, towards the end of December, I was just so burnt out by the end of the year, and I think a lot of people sort of experienced that. And I just decided I was going to post. I scheduled a couple of videos in December, and I just left it and basically didn't post for 3 weeks.
Right, clear your head a little bit.
Yeah, and just sort of because when you're posting so frequently, you just get into the motions of it, and it stops becoming enjoyable at some point. So you kind of have to have a break. Had a big break, and now I'm back into it.
Nice.
Posting 2 or 3 times a week. So I'm really excited.
Are your enrollments open for your platform at the moment, or they're shut?
So basically I do a big enrollment where I'm publicly talking about it quite a lot.
Yeah, right.
For a couple of weeks. And there's a discount code and that sort of thing. So that is passed. But you can enroll if you do reach out. You can schedule a call with me through my website. So some people are still doing that. But for the most part, the enrollment's closed for now.
Yeah. What's the next stock you're doing?
What's the next stock I'm doing? That's a great question.
Yeah, because you just did Thor, didn't you? Again.
I did, yeah. So I revisited Thor Industries. Quite a bit had changed with that business, so I wanted to revisit it, and I did a huge 90-minute sort of analysis, just going through and explaining some of the changes and going a little bit deeper. But that's basically where we're at.
Is that your biggest position at the moment? Your biggest holding? Thor?
It is. Yeah, it is. So I think it's about 25% of my portfolio. And
wow. Okay. Yeah.
Yeah. It's it had a tough year in 2018 and the start of 2019, but the last 4 months, I think it's up about 110%. So it's done quite well. It's recovered.
Yeah. So I guess 2020, we should talk. Well, I guess people are already experiencing it. We're going to change the podcast structure a little bit too. Hey. Yeah. So we're going to just make it much more chill, much more flowy. Basically, as though, I don't know, the viewer's just kind of listening into a phone call. Well, I guess it's literally what this is, right? We're just having a chat with each other.
I mean, I really like, because whenever we do the in-person podcast, they're always so free-flowing, just
so
because
much better.
It's just a conversation, and I think maybe we actually approach it differently when we do it in person, or we did sort of last year. But we're going to try and mimic that throughout the entire year. Yep, it's going to be better, guys, this year. Tune in.
I reckon it.
I think it really will be.
I think it will be too. Yeah. It's just going to be, so we're not even going to do our normal segments, really. I guess the only segment that'll stay the same is the Q&A, because we always want to answer questions from you guys. But basically, we're just going to talk about topics that are popping up during the week and topics that we want to talk about, and just hopefully what is a pretty free-flowing podcast. So yeah, it should be pretty good. And we've got a lot to talk about today. I don't even know if we'll get through everything.
Yeah,
but I guess the first thing we should say as well is that this episode is being sponsored by Hypercharts. Should I go through the Hypercharts stuff now?
Go for it.
This is a good little time. Hypercharts, I actually use it all the time. It's a really handy website. It basically, I know you guys have probably heard this before, but if you don't know what Hypercharts is, it just takes like all those finicky like little numbers out of a company's annual report or a quarterly report, and it just puts it into a graph. I mean, it's really helpful just to see, quarter over quarter, year over year of, revenue, whatever, or, operating income, whatever the stat might be, and you just get to see it displayed in a graph, which makes it so much easier to kind of follow along. And the other thing to mention with Hypercharts is that Mo and the team over at Hypercharts are currently working on Hypercharts private financials, where it's essentially the same functionality. However, you can use it and basically do the same kind of graphs for your own company. So you enter in the financial data, you get the same financial charts on your own dedicated page, which is pretty awesome. So definitely check out that. I'm not even sure if that's live at the moment, but it's pretty cool kind of feature that they're working on. And the other thing to mention too is that they do have a premium mode, but I'd encourage you guys to use the referral code YIP for Young Investors Podcast. And tell you what, now that I'm thinking about it, I can't even remember what the listeners get for using our code. I think it's 1 month free premium access. Is that correct?
I think that's what it was, yeah. You know what? Go click the link. Click the link. It's a podcast. But go check out their website, hypercharts.co/premium. Use the referral code YIP and find out what you get.
And find out for yourself. No, I'm pretty sure it was 1 month because they did they did the 2-week free trial, and then with the referral link, you can now get the 1 month. Anyway, that's Hypercharts. Check it out. I love using Hypercharts. Mo and Gally, they do a great job over there. And then let's head into, what should we talk about first?
I don't know. I mean, I guess the thing that's fresh on my mind is the earnings that came out this morning. So I guess we could sort of start there.
Yeah, go for it. Because what are we covering today? We might cover Facebook and Tesla.
Yeah.
Yeah, okay. Well, what did you learn about Facebook? What were they kind of saying?
Yeah, well, so Facebook reported their full year earnings, and they beat expectations across the board, although expectations isn't something I really care about too much. I think I sort of focus more on how they changed from last year, I guess, in terms of their earnings and their revenues. But revenue came in at $70.7 billion, up 27% year over year, so pretty good. Earnings per share was about $6.43, which was down 15% year over year. So following along from all of the quarters throughout 2019, revenue up big, but earnings down because of their increased expenses. Their expenses were up 51% for the year.
Is that all to do with the security stuff that they were talking about?
Yeah, it is. And I mean, they had a 26% increase in the headcount, the number of employees. So that's obviously very expensive. And that, that led to their earnings continuing to struggle in 2019.
I think it's interesting space. I'm not too caught up with Facebook just yet. I haven't had a chance to look at these quarterly earnings, but that's what Zuckerberg was talking about, is really most of that increase in headcount probably being people that are working on the security of their platforms and that sort of stuff, which is obviously something that you want to do for the long-term success of your business. But at the same time, that's very much a behind-the-scenes kind of thing that the viewer doesn't actually really see. Like, it doesn't particularly add functionality to their apps for the consumer, which is kind of interesting. So I guess from an outside perspective, it kind of just looks like Facebook's expenses might be increasing rapidly, but the user experience might not actually be improving that much. But it's kind of interesting in that way.
Yeah, I mean, they're just sort of spending more money to run the business as it should.
Yeah, exactly.
Protecting user data and security and safety, all of that good stuff.
Yeah.
It's kind of just like they've realized that, well, we actually need to spend quite a lot more money. We need to have more real people going through and reviewing content on our platform. That's kind of just a harsh reality. And whether that changes in the future, maybe it will. Maybe AI will get substantially better and they can pull back on these employees. 10, 20, 30 years down the line, who knows? But yeah, I mean, in terms of their users, still growing very well. Daily active users,
Really?
1.66 billion, up 9%, which is pretty impressive. Monthly active users up 8%.
Is that for the quarter or for the year?
That's for the year.
Oh, for the year.
For the full year.
I was going to say, holy shit.
So year over year, they've grown by another 8%. So I mean, their user growth is slowing down to probably single digits. So that's kind of sort of running out of room in terms of where they can generate revenue.
Fair enough too. Well, how many people was it on a monthly active users?
2.5 billion.
2.5 billion. That's a massive percentage of the world's population logging into Facebook at least once a month. That's pretty crazy. Not gonna lie.
And I mean, that's just the Facebook platform. If you're talking about how many people are using at least one of their products, so they have this new measure now that they call the family monthly active people, so MAP.
Yeah,
I don't really like that, but
whatever.
that figure came in at 2.89 billion.
2.89. So that's Facebook, Messenger, WhatsApp,
Instagram,
of course, of course. Wow, that's a lot of people.
Yeah,
it's a hell of a lot of people. So Facebook. So let's say Facebook next couple of years, because so many people already use their platforms, they don't grow their active users too much. How does Facebook continue to drive profitability? Do they just charge advertisers more for the ad space? Do they just try and show more ads, like saturate their platform more with ads? Like what do you reckon?
Yeah, well, there's really two driving forces of their revenue growth, their top line growth. And so one of them would be the number of users on the platform.
Yeah.
And the other one would be how much revenue can they generate per user? How much money are they making per user in advertising in advertising dollars?
Yes.
And if you break it down, it's actually quite interesting how much they're making per user. So if you look in the US and Canada, they're making $41 per user.
Okay.
But if you go to Europe, they're making just $13 per user. So
holy moly.
If that's going to go up and match the US in ad spend at some point, then there's a little bit of an increase there. But even more impressive is the last two segments, which represents about 1 billion users on Facebook.
Yeah.
And these segments are Asia Pacific and rest of world. So Asia Pacific is now generating just $3.57 per user. And rest of world is $2.48. So you're looking at 10 to 15 times less per user than the US and Canada for 1 billion people using Facebook. So I think that's ridiculous. There's certainly more room to grow. We obviously don't know how quickly that will catch up to the US, or if it ever will, or if the US is going to come down. Who knows how it's going to play out. But there's no question that they have room to grow in that area. It's not just the growth in their users that's necessary.
Yeah, well, I guess growing revenue per user just comes down to how many ads are shown per user, or how much an advertiser has to pay for an ad that's shown to a user. I guess they'd be the two driving forces of revenue per user.
Yeah, exactly. It really just comes down to demand for ads.
Yeah.
So up until now, because users have been growing, you can think of it as the real estate for advertising space increasing, because for every next person who joins Facebook, there's more news feed space to put ads. So that would put downward pressure on the cost of ads. But now that that's slowing down and there's still a ton of advertisers coming across from traditional methods like newspaper and TV, there's a ton of upward pressure on the cost of advertising.
Yeah.
So interesting.
Yeah, interesting. Do we have anything else? You want to leave Facebook there, talk about something different?
No, that's just about it. So well, let's talk about Tesla.
Tesla. Oh gosh. Okay. I need to get up the data. So they haven't done their conference call yet. So I think that's happening because we're recording this on a Thursday. So I think that comes out later today. So we don't have anything juicy to talk about from the conference call. But yeah, Tesla had a really, really good quarter. Quite exceptional. So we already know about vehicle deliveries because they get recorded ahead of time. But so we've got in this quarter 92,600 Model 3s. And where is it? Model S and X, 20,000 or 19,475 technically. So record vehicle deliveries, record production and record deliveries. And from there, they kind of break their reporting down or their earnings release down into these really nice segments now. It makes it so much easier to read for Tesla. So they start out with just highlights. So their highlights in terms of their cash, so they had a $930 million increase in their cash and cash equivalents in Q4. So they're now up to $6.3 billion of cash in the bank, which is great. Kind of thinking about recession-proofing themselves a little bit, because obviously they're luxury cars and luxury cars will get destroyed in a recession. They had in this quarter, they had $1 billion of operating cash flow less CapEx, which is what we call free cash flow. So how impressive is that? That's by far a record for Tesla in terms of free cash flow. $1 billion in the quarter, which is pretty impressive.
It's really impressive. I mean, they had so many negative quarters in the past while they were kind of trying to push these ramps and get these. I mean, they have so much CapEx to do, I guess, in terms of gigafactories and all of that good stuff. I mean, I'm not following Tesla very closely, but you could tell me about it. But $1 billion sounds pretty damn good for a quarter.
Well, I'm just pulling up my notes here because you're right. They do have a lot of CapEx to get done. And I believe in this quarter, all right, here it is, $412 million of CapEx, which is still, I think that's a record number for capital expenditure in a quarter too.
Right.
Or actually, don't quote me on that because we might, I'm only seeing the last year and a bit. But yeah, it's crazy that they were able to produce $1 billion of free cash flow, considering that their CapEx in the last quarter was even higher than what it usually is, which is pretty fantastic if you ask me, especially as a shareholder. So in terms of profitability, we've got $359 million in GAAP operating income, which is pretty impressive. I like actually turning more to the operational data out of Tesla. I think that if you're an investor in Tesla, you're thinking so much into the future that what they're doing right now actually has pretty little significance in your overall investing journey with Tesla. Obviously, you do have to know where they are right now because you want to make sure that nothing's going wrong. But for instance, Model Y production is starting this month, which is crazy, very much ahead of schedule.
Wow.
So they're already starting to produce Model Y cars.
Hang on a second. Yeah, when did they say they were originally going to?
I think it was in the second half of this year.
Wow. So I just realized that Gally from Hyperchange. Hyperchange. Oh my God, Gally. I'm so sorry. No, he made a video maybe a couple of months ago saying that, there was some hints that they were going to be well ahead of schedule.
Yeah.
And he was spot on.
Yeah.
Again.
Exactly right. He's actually really good at these predictions.
He is.
Yeah. Model Y is ahead of schedule. They had their record deliveries, 112,000 total cars in Q4. They've also got the Model 3 ramp up in the Shanghai Gigafactory, which is, again, it's underway right now. So that will hopefully help them increase their Model 3 production and deliveries for 2020. And as well, one little interesting thing is that their energy business has continued to grow. And one of the interesting things as well is that their solar business has been rapidly declining. And I think that's starting to turn around because in the last quarter, they implemented a business model where it's a monthly subscription to have Tesla solar panels on your roof.
Oh.
So their idea here is that you can just pay month to month. Okay, it's like a lease. So you just pay month to month to have the panels on your roof, and they plug it into your grid, so that right from month number one, you can be turning a profit from having solar on your roof. It doesn't, everyone's always like, oh yeah, it'll pay itself back in 8 years or whatever. There's none of that anymore. You just pay a monthly subscription, put the panels on your roof, and then you generate a profit from the first month that you've got those panels up there.
That is so damn smart.
It's smart, isn't it? Yeah, very smart.
That's good. I would have never thought of that. That's great. because you're right. That's a huge thing. A lot of people just think, man, I'm not going to fork up this up front because when am I ever going to get it back in the future? It's that classic short-term mindset where you can't see. It's an investing thing. It really is.
It is, definitely.
You have to invest up front and you have to have them for quite some time before you collect back what you get over the long term in electrical savings, in energy savings. But that's really smart to sort of help people overcome that barrier and just think, well, if I can start saving right now, then it's an absolute no-brainer.
Yeah. No, you're exactly right. So I expect that will probably grow as more people learn about it, but it's only just taken a turn on the uptrend because they really just let the solar business just die because they were just working so hard on other things. But hopefully we'll see that. And now, of course, 2020 will be a year to watch the solar roofs as well, those solar roof tiles. So that'll be ramping up in this year as well. So it's really exciting. But yeah, I guess they did actually tell us a little bit about their outlook as well. So for 2020, they say that vehicle deliveries should comfortably exceed 500,000 units. To put that in perspective, 2019 they did, 360,000? So they're definitely expecting that to continue to grow. And they put that down to the growth in Model 3 in Shanghai and Model Y in Fremont. So that'll be super interesting to watch.
Unbelievable. Yeah. I feel like maybe this is not accurate, but I feel like Elon's getting a little bit better with his predictions, his forecasts. I feel like he's hitting them a little bit better. I think he's just
sandbagging him a little bit more now.
Yeah, that's true. I mean, he used to just make these outlandish expectations and then missed them and kind of kept hurting the stock price, I guess. But
I think his problem was that he was telling Wall Street the Tesla internal goals instead of like a realistic, because obviously he wants to push his employees and push the company as fast as possible. So their internal goals are going to be really, really tough to meet. But I think the problem that he was saying is that, we really want to be able to do, 1 million cars in 2 minutes. It's like, no, Elon, you got to like, just give like a reasonable number to the street so that then you can absolutely smash it. That's what sandbagging is. And then you can reap the rewards of beating your estimates as opposed to failing, because that just obviously gives Wall Street or the press a big headline to print that Tesla's failing. So I think he is learning. I think you're right.
He's learning. Yeah. And the stock price is moving up with his learning.
Oh, absolutely crazy. I checked it just before, but what is it up after hours tonight?
It's up about 11% now.
11%. Wow. So it's gained $65 after hours per share. So it's now up to, what would that be? An open, if it held?
$6.50.
$6.50. This was a company that was at $180 per share, not like, 6 months ago? Or was it longer than that? Actually, no, it was more like, when's that? Like
June.
It was
7 months ago.
8 months ago.
Yeah. And now we're talking about $120 billion market cap.
Yeah.
Wow. Crazy. Absolutely crazy.
And this helps Elon as well. One thing I was just going to say is that his compensation package works in increments of $50 billion on the market cap.
Yeah. So he already hit the 100, right?
I think so. I think he's already hit that first tranche.
That's right. It needs to hold for a certain period of time as well. It can't just hit it. I think it was 3 months or something, or 1 month. That it needs to hold above that price. And then he gets it. But and then, I mean, if it's at 120 after hours, he's almost at the next milestone, the next 50, which is insane.
Yeah. It is crazy. It is crazy. Anyway, that's kind of what I took out of Tesla. I'll probably have more to talk about next week because we haven't heard the conference call yet. There's probably going to be heaps of stuff in that conference call to pay attention to. But yeah, I think that's probably where we might leave Tesla.
Yeah.
Move on to our next topic.
Yeah. What have we got? You can choose now. I chose those.
Oh, okay. Well, one thing that I thought was interesting and kind of relevant for this week is that I read an article saying that there's now record Australian Open prize money pool. Oh. So I didn't realize how much money was involved in prize money when it came to tennis. But get this. So it says here, the world's best players will compete for a record $71 million of prize money at the Australian Open in 2020, an increase of 13.6% on the record set in 2019. So I went through and I did a little bit of digging, right? And I just wanted to see exactly how much you would get paid for the various stages that you got knocked out. So if you get knocked out in round 1, you'll end up with 90K. If you get knocked out in round 2, 128K. Round 3, 180K. Round 4, 300K. But this is where it starts getting really enticing. I kind of wish I had tried a little bit harder with tennis maybe when I was a kid. So if you reach the quarterfinal, then you get a cool $525,000. If you reach the semi-final, it's 1.04 million. And then runner-up gets 2.065 million, and then the winner gets $4.12 million Australian dollars.
I never realized that if you got knocked out in round 1, you still made like 100K, more than the average salary. And this is just one. This is one tournament out of the 4 major ones, or is it 4 or 5? I'm not 100% sure.
It is, the major
something
opens.
like that. Yeah. But that's insane. Yeah, it's crazy.
That's pretty nuts, isn't it? So anyway, there's a kind of little fun fact of the week is that if you're in the Australian Open, you are going to rake in the big bucks. But that's what I think. Like, imagine just how much money people like Roger Federer, Djokovic, Rafa, how much money they would have just won over the years.
Yeah.
I don't even know. Sorry, you were going to say?
No, I was just going to say, there's been years where like Federer has won all of the Grand Slams.
Wow.
And you're just, and we're still just talking about the prize money. We're not talking about sponsorships or, sponsorships in terms of like the clothes and the rackets that they use, and then sponsorships off air. Maybe they do like a Swiss vitamins ad or something.
Yeah.
There is so much money in this. And I was just going to say as well, I wonder what drives that increase of 14% in the prize money. I wonder if it's just that it's becoming so much more popular, that there's more demand for the sport. It generates more revenue, and then they can give more prize money. I'm not sure exactly what drives it.
Yeah. Who decides what the prize money is going to be? That's an interesting question. I've got no idea, to be honest. But yeah, anyway, that was a kind of interesting story. But man, imagine being good at tennis, hey? It'd be quite nice.
Did you play tennis when you were a kid?
Oh, not really. Nah. I'm actually pretty bad at tennis. I played AFL and cricket. They were my 2 sports.
Gotcha.
Yeah.
I think I played for maybe a year or like 6 months when I was like 5.
Right.
I didn't play I didn't play games. It was just kind of, that thing that little kids do where they just do training.
Yeah.
So yeah, I started my career, but I didn't follow through.
Faded out fairly fast. All right, so that's the tennis. I don't know what else is on the agenda.
Yeah, well, I mean, we should probably talk about this coronavirus.
Yeah, far out. I feel like I've got coronavirus at the moment. I've been sick the past couple of weeks.
I hope not.
There's the title of our podcast. Brandon gets the coronavirus.
Biggest clickbait ever. God. No, but it's been kind of the topic of discussion for the past couple of weeks, and I feel like it's probably not going to, I mean, I don't know, but I feel like it's not going to last too long. So we should probably talk about it now, get it out of the way. No, but as of yesterday, I don't actually have today's numbers, but as of yesterday, there was 132 people who have died from this virus, which is quite a lot now. It's growing really quickly. It was just a couple of days ago before that where it was 40. So it's really kind of tripled. In just the space of a few days, which is insane. The Hong Kong Stock Exchange is the market that's being the most affected by this, down 4% this week. And it's really being driven, I guess, by travel and tourism related businesses that are being hurt. Just this morning, Delta Airways cut their flights by half. Out of China or into China, I believe. So, and that's following along from all of the other major airlines in the US, American Airlines and Southwest. So, they're going to be significantly hurt in the short term, at least.
Yeah. Yeah. No, that's really interesting. It's interesting that we talk about this. I hadn't really thought about the business implications of something like a disease or an illness like this. But yeah, you're right. Like tourism would just be zero. No one will be going to China for their holiday if they're at risk of getting the coronavirus. The one thing that I was thinking the other day is that I wonder what the top dogs at the company Corona think. Like, what do they think? Do they just think like, no, surely no one will actually think that the coronavirus is based on our product? But then, like, the other part of me thinks, like, does it actually have, like, any sort of effect on the company Corona?
Yeah, you know what? I was thinking, is it going to be negative because people are going to associate it with this virus?
Free advertising.
Or is it free advertising because everyone is... Because there really is a psychology to having a word or a brand name being heard over and over and over again. It really sticks in your head. So,
you know what?
Yeah, I wonder if it's going to have an effect afterwards. People just, once it's over, everyone's like, let's go get a beer.
You know what I think it'd be really interesting? I reckon Corona should now do this massive advertising campaign where they just completely own it. Like, they own the fact that they're called Corona. They should, like, do an advertising campaign where they're like, Corona, 100% free of coronavirus, or just something like that.
My God. I can just imagine the backlash.
I was going to say, there's probably going to be some outcry, some backlash. How dare you? People are dying. That's true.
Yeah.
Yeah, maybe don't do that, Corona.
Yeah, don't take our advice. We know you're listening, so...
Yeah, exactly
just
right.
don't do it.
Corona CEO. Sends us an email tomorrow.
Take it down.
Yeah, please take your podcast down. I wonder if that'll ever happen to us one day.
Someone taps us on the shoulder. Can't say that.
Yeah.
Probably will.
No, I don't think we'll ever get enough viewers for anyone to.
Wow.
To we'd have to say really, really bad.
Let's do it on purpose.
Or maybe we'll drive our viewers away if we say something horrible like that. Maybe we should just stick to talking about legitimate stock market news.
Yeah, we'll see.
Do we have anything else to talk about for coronavirus?
No, that was just about it. Just I
thought Starbucks closed 2,000 Chinese stores.
Yeah, I thought the business side of things was kind of interesting. McDonald's closing stores, Pizza Hut, Disney theme parks was one I didn't think about in Hong Kong. It's the busiest time of the year for those theme parks. They're shut down. Apple retail stores also closing, although that's not a particularly big one. But I mean, It really depends, I guess, how long this kind of lasts for, but I can't imagine it lasting that long that it significantly impacts these companies' profits over a year, for example.
Yeah.
We will see.
The last I heard of it was that now scientists in China and now Australia have replicated the coronavirus in the lab. So I think apparently that's the first point in developing a vaccine for it. So I don't know, hopefully if, and that's the thing, like the worse it gets, the more resources will be put towards developing some sort of, cure or vaccine or something. So yeah, I think it's interesting. But like the interesting thing is that it's such a big deal because it's so mysterious and it is deadly for some people. For some people. But even still, like we've been hearing about it for a while now, and I know this is like a sad stat, but it has only killed 132 people. So I guess like obviously it's extremely sad that 132 people have died from it. I guess like if you compare it to a lot of other illnesses that have come before coronavirus, that number, the death toll there is probably much less than a lot of those other illnesses.
Yeah, no, you're 100% right. I mean, if you just took something as simple as the flu, I mean, hundreds of thousands of people die from the flu every year. So
yeah, exactly.
Yeah, I mean, it's kind of, I don't know. I don't know how to feel about it because I haven't really done a lot of research into it, but I feel like it's one of those things where the news just grabs it a bit, puts it everywhere. Like breaking news, another person in Victoria has got the coronavirus.
Oh
like,
my God.
It's just, I don't know.
put up the pictures of people in hazmat suits. And
yeah, exactly. Like make everyone scared. Like I know a lot of people in Australia are like freaking out about it, and I just think it's kind of overhyped.
Yeah.
It's kind of like, we're fine.
Well, there you go. Our completely uninformed, uneducated medical opinions. Look, I think the last thing to top this segment off is to say, if you've got the coronavirus, don't bother seeking medical attention because you just don't need it. Yep. It's just a hoax. No.
Brought to you by the Young Doctors Podcast.
The Young Doctors Podcast.
The one-stop shop for your vaccine information.
Yay! All right, let's leave coronavirus there.
Yeah,
let's move on. What else we got? Oh, here's one thing I wanted to bring up. Once I clear my throat. Gosh, maybe I actually do have coronavirus. Gosh, man. Just my luck. Brandon dies from coronavirus. Young Investors Podcast is cancelled. God damn it. On my birthday too. God damn it.
Damn. Not good.
So next news story anyway, we've got Saudi Aramco has boosted the size. You remember how we were talking about this company at the end of last year? Yeah, so they've boosted the size of their initial public offering. I don't know how they do that. I don't understand the process behind that. But they've increased the size of their IPO by nearly $4 billion. Because apparently they could just, show up and sell more shares and it still be included in their IPO. So I don't really understand. Is IPO maybe like a period of time? I don't know. Anyway.
Yeah, I mean, a company can sell their stock. They can just create more shares out of thin air and sell more at any point. But it's weird that they're considering it still part of the initial public offering when it's not the initial public offering, because they did the initial one. Like it's in the name,
Yeah. Well, listen to this. They say Saudi Arabia's state-run oil giant said that on Sunday it had raised a record $29.4 billion after exercising a green shoe option to sell 450 million more shares than originally planned. I don't know what that means, but there's the explanation. Does that mean anything to you?
That means nothing to me.
Okay. So maybe there's some technical thingamajig that means that they can sell more shares. Anyway, it says the option allowed the company to issue more shares to meet demand from investors. Aramco initially raised $25.6 billion last month when it offered 3 billion shares worth 1.5% of the company. So initially $25.6 billion is what they raised, and now it's up to $29.4 billion. And it said, the last point here is it says that Aramco's market cap is now about 1.85 trillion, which makes it the most valuable company in the world, ahead of Apple at about 1.3 trillion. The thing I find interesting, or the thing I would take away from that last point there, is that how crazy is it that the next 10 years, we're no longer going to be talking in billions when it comes to market cap. It will start to become more and more normal to hear the $1 trillion market cap.
Yeah, it's fascinating because that just reminded me of something I heard. I was watching a little bit of CNBC this morning just to catch up on the earnings news really quickly before we jumped on the podcast. And one of the analysts was saying, well, Facebook stock is already at $700-800 billion. They're not going to double in price again. And I'm just thinking, well, I mean, if you're looking at where the biggest companies in the world are now, that's true. But if you're looking 50 years down the road, maybe Facebook's not going to be around 50 years, but let's say 30 years, for example. Yep. You look 30 years down the road, I don't think there's any doubt that there will be a company that's 5 trillion in market cap, maybe even more. So it's kind of a bit of a redundant statement to say, oh, it can't double because it's so big already. Well, yeah, it's big, but they've still got a lot of runway to go. And there's companies that every day prove that you can breach $1 trillion, Apple being one of them. Yeah. And well, oil still runs the world, apparently. It's still the most valuable commodity in the world, led by Aramco.
Yeah, basically. Here's an interesting question. So I was looking at what comes next after trillion. Do you reckon that we will still be alive when we hear about the first quadrillion market cap company?
No, we won't see that. Well, I doubt it unless there's huge inflation, which I hope doesn't happen.
Yeah. But, well, I mean, if we live to 100, I don't know, what year does that take? Like, to about the turn of the next century, I suppose. what were the market caps looking like at the start of the 1900s? I don't know.
That's a good question.
Were they in the millions? Probably in the millions, I would imagine.
It's a good point. I don't know.
They've transitioned through the if it was, then in 100 years they've gone through millions and billions into trillions. So could we in the next 100 years see trillions into quadrillions? I don't know.
Maybe.
So it goes quadrillion, quintillion, sextillion, septillion, octillion, nonillion, and then decillion.
Well, I just pulled up a sort of a bit of a stat here. In 2000, actually in 1999,
yes,
the biggest company this was during the height of the tech bubble as well.
Yes.
Microsoft was the biggest company and they were worth $600 billion. So it's already doubled and a bit more from the height of the dot-com bubble.
Yeah.
And that's only 20 years. So maybe you're right.
Maybe we'll see a quintillion market cap.
Maybe.
Will we see I wonder if we will see the world's first trillionaire, individual person trillionaire.
Yeah, well, that kind of discussion's interesting because you have so many people who are just, Forbes does a good job and there's a Fortune 500, I don't know, there's a few companies that do their best at estimating it. Yeah. But really we don't know. I'm sure that there's someone out there who's worth $1 trillion at the moment. I'm sure of it. I reckon there is. If there's this much money in oil in one public company.
Right. You reckon someone's keeping quiet somewhere?
There's some rich royal family hidden
somewhere
in the Middle East somewhere who's worth $1 trillion. Maybe not an individual person.
Who knows? Yeah.
It'll be interesting when we first know about someone who's worth $1 trillion though. That'll be fascinating. I think we'll definitely see that for sure.
Yeah, I reckon so. So, Saudi Aramco, you buying shares, are you?
Yeah, absolutely. I'm the biggest shareholder.
Loading up on stock.
I control it.
You control, well, mate, Jesus, congratulations. I should be interviewing you right now. We shouldn't be doing this together. I should be bowing before you and shining your shoes.
Yeah, well, that is what you're doing. It's just off camera. You just... The listeners can't see.
No, we're doing this live, by the way. I'm wearing a headset, and right now I'm shining Hamish's shoes.
Yeah.
What do you think? Do you reckon that's shiny enough? Do you want a little bit more?
Do the left one a little bit more.
A little bit more. Yeah. Yes, sir. My thoughts exactly, sir. Very good, sir. Oh, I tell you what, my shoulder's getting sore. Man, this shoe shining business. Oh, gosh. All right. Moving on. Jeez. Have we got anything else to talk about, or is that basically it?
No, let's talk about Trump and the election. Let's talk about the US election. We have to. It's the start of the year.
USA. All right, I'll stop. Sorry.
Yeah, that's enough. All right, stop. Okay, I'm trying to read this story. Okay.
Oh, God.
It's not actually. It's not a story either. It's just kind of a topic. But yeah. So we're at the start of 2020. Everyone knows that we are. I think. Oh. I hope so. Hang on. Yeah, we're 30 days in. Not really.
Don't check us on that one. Don't
fact check me on that one. But the US election is in November, I believe.
Yeah,
this year. So it's going to be interesting. I think it's going to have a big effect on the stock market.
Oh, definitely.
I think. What do you think? Give me your thoughts on what do you think will happen if Trump wins? What do you think will happen if Democrats win? My extremely
uneducated opinion. My thoughts are that I've heard a lot of people, or myself included, we all think that kind of this US market is pretty overvalued. But at the same time, I kind of think, well, if Trump stands up every second day and says, look how good my economy is he's probably going to do everything in his power, like anything he realistically can to try and prop up the markets, at least until the election, to give him the best possible chance. So I feel like over the next year, we could see like the US market just continue to surge or stay pretty healthy. The only thing I don't know is I don't know how much power he actually has to keep markets progressing forward. For instance, like I just don't know how much influence, if any influence, he has like over the Fed, or if the Fed's completely like independent and they do their own thing and don't listen to the administration at all. Which is that the case?
Yeah, well, the Fed is supposed to be independent. But in reality, they're not.
Really? Okay.
I mean, Well, I mean, if you look at what happened last year, I mean, Trump was basically just getting angry at the Fed at what they were doing, and then the Fed's behavior just completely switched.
It changed.
And now Trump's happy with what the Fed is doing. Yeah, so I mean, he doesn't have direct control over him. It's not like he can go in there and say, do this. There's supposed to be an independent body that makes their own decisions.
Right, okay.
But yeah, it'll be interesting. I don't know specifically how much power he specifically has. I mean, we know he passed the tax cuts, but he did that while the Republicans had a majority in both the Senate and the House, I believe, whereas now they don't have a majority in the House. So I think it'll be more tricky if he needs to pass legislation. But there's things such as he could make a deal with China, whether it's a good deal or a bad deal, if he makes one.
True.
I think they did the first stage of that deal already, but there's a few more that are supposed to come. And if he does that, then
if he's looking like he's going to lose the election, then he probably will. He'll just try and make some sort of deal with China to look at how good I am. And but yeah, I don't know. I watched an interesting video from Adam Schiff the other day about him just talking about how, with this whole impeachment stuff, Trump's lawyers are basically not denying that he's guilty. Basically, the thing they're debating is if he's guilty, does that mean he should be removed from the office? I mean, like, it's kind of crazy when you're in a situation where everyone's kind of like, yeah, okay, he did it. And then one half of the people are saying like, yeah, okay, he did it, but so what? And then the other half is saying, okay, yeah, he did it, so we need to get rid of him. It's like, he did it. But yeah, you're right. I think that the Republicans have control of the Senate. Is it the Senate or one but not the other? Yeah, okay. Yeah. Because that's why he did get impeached, because the Democrats have the other one. Is that right?
They have the House, but it has to be voted on in the Senate. And Republicans have the majority, so
they'll just vote it down.
It's very unlikely that he would get kicked out of office. I would say it's almost impossible.
Yeah. But yeah, interesting. I mean, to be honest, I don't really know how politics will affect these things, but I mean, I guess my general uninformed opinion is kind of the same as everyone else's, is that if Trump wins, the markets will probably do pretty well. I feel like if the Democrats win, then the markets will probably compensate quite instantly and probably drop a little bit. But obviously I don't know.
Yeah, I think in the short term, at least, if Democrats win, there'll be some trouble in the stock market. In the same way, when Trump was elected, there was a bit of a run up. People were kind of happy about that. And I guess that's just because there's a lot of talk in the Democrats about breaking up big businesses and increasing taxes on corporations and on the wealthy, and that all kind of has it would all have a negative impact on the stock market. But yeah, I don't know how that would play out in over a 4-year period if the Democrats got elected. We really don't know. It's kind of it's speculation, obviously. Yeah. But yeah, I mean, the markets are just they're so overvalued.
Yeah, they are.
So it's not even a matter of these are just sort of catalysts that we're saying, well, this might trigger it to finally represent, the true value of businesses. But yeah, it's got to happen at some point. It's got to happen.
Well, I mean, the historical measures, as I always talk about on my channel, they're basically stretched as far as history suggests they can be stretched before investors just in general realize that, hang on, we are getting such bad value for money right now. So, I don't know. Look, I hope that there's some sort of correction or things kind of even out to how they should be in this year. But in all honesty, I don't know. And a lot of that comes back down to the political factors, I guess. But yeah, should we do just maybe one or two Q&A questions and then get out of here?
Yeah, let's have a look. Let's see what people are talking about.
Well, I like this one here. Maybe we'll just answer this one because we can't go in depth on this one because it just takes so long. But what are the different methods that you use to calculate the intrinsic value of a business? Do you want to answer that one? What are the kind of the methods that you go through? Because I imagine you'd have a couple. Yeah,
well, the way I think about intrinsic value is, what am I going to get back for what I'm outlaying today? So what am I going to get back? So that's like the first question. And then you got to say, well, what form of returns am I going to get? And we know that the form of returns comes in dividends, and it also comes in the stock price going up. So now you're sort of thinking about how much is the stock price going to go up for a business, and how much dividends am I going to receive? And that's sort of the line of thinking that I'm going down. And then I'm thinking, well, what moves the stock price up in the long term? Well, if a business is more profitable, if it's creating more profits, then people are willing to pay more for that business. So that's the line of thinking that I go down. And then in terms of what I'm actually doing, in terms of calculations, I'm basically doing a discounted cash flow, which is, or a net present value is another way of looking at it.
Right.
Which is where I'm just calculating the total amount of cash I can get back from a business in the future, coming up with an estimation, and then comparing that to the price today. And that's kind of the way that I approach it.
Yeah, I do the same. Now I do, now that you taught me.
I really like it. I think it's just such a raw...
It makes sense.
There are
issues with it, but
there is.
If you take the time to know your company, so you're really confident in that growth rate, I think that the way that you taught me and the way you go about it with that terminal value is smart. You don't get over the top with that terminal value. I think that that's a good way of doing it. I like little Warren Buffett's owner's earnings kind of calculation with the capitalization rate as well. I think that's pretty cool.
Yeah, I think it makes complete sense. Taking what cash is left over after the normal operations and then subtracting whatever they spend to maintain their assets, their machinery and all of that stuff. Whatever's left over is really just money for shareholders. It's either going to come out as a share repurchase and push the stock price up, or it's going to come out as a dividend, or it's going to go back into the business to make the cash flows of the business go up, which will make it more valuable and people will pay more for the stock. It's kind of like all of that cash that's left over. I really like the figure. I think it's a really good representation of what could ultimately come back to shareholders. And I really like it. And I mean, we can use this in combination with many other sort of intrinsic value calculations. You have Phil Town's method, which kind of looks at the stock price and estimates a future PE ratio, like what's the multiple going to be on this company in the future, so we can estimate what the future stock price can be. That's sort of another method we can use in combination. And there's many methods, but all of them really come down to what are we going to get back from a business.
Another method that I was talking to Jason Hughes about just recently is the way that he kind of tries to do it is he just looks at a financial statement and he tries to model out into the future each line of that financial statement. He just goes through and tries to figure out, if you're looking at Apple, let's look at iPhone and model that out to the future. Let's look at iPad and model that out. It's a really detailed way to go about it. And then he just tries to model all of those lines out into the future to see where the company might be at in the future, and then work backwards from there to see what he'd like to pay for it today, kind of thing.
Yeah, that's the traditional valuation method that we were taught in equity investment analysis at university. Right. It's just the classic start with, there's multiple ways you can approach it, but you start with revenue and then, what's their margins going to be? So how much profit's going to be left? And you sort of go through those motions to bring up, you do all of the lines, basically.
All the lines.
And you work your way down to the profit. Whereas sort of Warren Buffett, I guess we just come up with a standard growth rate that we're growing the cash flows rather than sort of modeling out maybe margins decrease over time and this decreases over time and that sort of thing. So interesting.
Should we wrap it up?
Let's wrap it up. I think we did a good job this week. I liked it.
Yeah, it was really fun. Yeah, obviously the new structure is like it's new, so it might take us a couple of weeks to kind of get into the swing of it. But I think like going forward, we're just going to try and make it really chill and just have a good chat like what we did today. Just have a good chat about some different topics that we're interested in or that have popped up and caught our attention. So I hope you guys like the format. Make sure you leave a comment, give us some feedback on it,
Let us know what you think. Give us some topics, questions, news stories you want us to talk about. And as we did in this podcast, we'll just sort of ramble for an hour, talk about our problems.
Talk about our issues. Yeah. It's good. This podcast, it can be something that you just put on in the background and it helps you fall asleep.
Sleep like a baby after this. You sleep after 10 minutes in, you'll be out. You'll be out. Most boring podcast. No, I'm kidding.
Oh, you're making me cough so much. Oh, dear. Yeah. That's it. It'll just send you straight to sleep. You'll be dreaming of dollar signs.
Yeah, that's it. All right, so that's it. We're wrapped up for today. Thanks everyone for listening. And as we mentioned at the start, Hypercharts was our sponsor for this week. Head over to hypercharts.co/premium and use our referral code YIP if you want 1 month free of premium. But thanks everyone for listening, and we'll see you next week.
See you later.